I'm getting ready to show you something you don't want to see, especially if you think the bottom's in. If you think the bottom's in, then this is going to be another piece of information for you that would support that idea. Plus, it's something that you probably won't see anywhere else, and you probably haven't considered. It's pretty cool. For those of you who think the bottom's in, I don't know if this will change your mind, but here's what this will do, and here's what you're going to strive to do with this information. It's going to be info that you need, and you're going to need to mash up with all the other variables you have and that you think are most important. Well, you haven't considered this, first off. So the question is, how strong of a variable, how big of a variable is this in my equation of I think the bottom is probably in? Or, I think the bottom's in. Do I think this, what Cosasverdes is going to show me, if I think that is a main ingredient in my considerations, or should be a main ingredient, like flour is a main ingredient in cookies, butter is too, sugar is too. You can't make cookies without those three things in general, right? You could kind of get by without baking soda or baking powder or whatever the hell you put in there, or both. You can kind of get by without chocolate chips, but you can't get by without butter and flour, sugar. You can't do it. So is what I'm about to show you a main ingredient? Or is it not? Or do you not know? And therefore, maybe you shouldn't be so confident that the bottom's in. So that's what you're supposed to do. You don't have to agree with my opinions that a bottom is still probably not yet in. I think the percentage chance of it being bottomed has gone up a lot recently. I think it's close to 50-50. I'm not asking you to agree with that. I'm asking you to listen to what I'm about to show you and use it wisely within the tools that you're using within your crypto analysis. Ready? Let's get it. I'm going to use the weekly chart. We're going to be looking at the previous two bottoms, late 2018 to roughly March of 2019. When Bitcoin was $3,200 down here. 2013 is over here. This is January 2015, August 2015, the double bottom. We're gonna zoom into there when Bitcoin is about 160 bucks, 180 bucks, or whatever is the bottom. And we're gonna compare it. We're gonna compare a specific ingredient, okay? Something that I think is integral, something that I focused on so heavily during when I even first started YouTubing for crypto, weekly 10, price's relationship to it. It's super important in bull markets and it's super important in bear markets. It's extremely important, particularly when you go to macro trend changes, okay? So when you have a macro trend change, you have rules, okay? So the question is, do you think what I'm about to show you has rules? Or do you think these are part of the rules of a trend chain, macro trend chains? And if you do think this should be part of the rules, then you shouldn't think that the bottom's in, for example, okay? All right, here we go. Let's zoom in to the bottom of 3,200 after the 20K top. This is around late 2018 to early 2019. How many times did a weekly candle close above the weekly 10 before it got hot? Which that was a $400 million market buy across a few exchanges by the same group. So, and it might have been a hedge fund, but it was kind of like the same people. It was the same people. Smart buy, because they waited for this. How many closures? 1, 2, 3, 4 got hot. So 4 closures. Okay. How many closures? How many kisses? How many times did price respect it? Okay, that's a little too far away. I don't count that as respect. These candles were going away from it, so that wasn't respect. This got hot. That's a maybe. I might count that. 1, 2, 3, 4. That one didn't do it. 5, 6, 7, 8, 8 times. Okay, 4 closures above and 8 respectful interactions. Controlled interactions, not super volatile and all this crap. Nice and controlled interactions, respectful, like a Japanese polite bow interaction. Not a Japanese bow, not a bow movement, a bow, a bow, not bowel. That's anyway. So it kissed it 8 times. The previous bear market was a little different because it was essentially a quadruple bottom. So it interacted for a lot longer on the weekly 10. So similar to how in EMA, let's say the 55 EMA, it adds the previous values of the previous 55 data sets, right? The price of at that time frame, the closing price usually. Adds them all together, an SMA does. The simple moving average will add them all up, then divide them by 55, and that's your average of the last 55 candles. Simple moving average. And EMA does the same thing, but for the numbers more close to current, like the most recent stuff, they get a stronger value instead of an equal value with the rest. So I'm going to do something similar to that here. Everything here and on until it gets hot here. So this is where it ends. Bull market, obvious technically in hindsight. Obvious there in hindsight. Not obvious exactly on the candle, but now it's obvious. This gets full value. Anything from here to here gets half value. So if there are 8 kisses, then it only counts as 4 because it's farther back. And I'm going to cut things in a third from here to here in this zone. Okay? All right, and then we're going to add it together. Trying to be pretty fair here because that's how EMAs sort of work. So closures 1, 2, 3, and then it got hot. Kisses, interactions, 1, 2, that was too volatile. That's too far away. 3, 4, 5, 6, 7. Okay. 3 closures. Seven kisses for the first segment. 1 closure. 2, 3, 4, 5, 6, 7. Divided by 2. Okay, let's just count it. 3 more closures. I say for this one 7. Okay. So plus 3 more. How many kisses? 6, 7, 8, 9, 10, 11. Let's count it as 5. So 7 plus 5 here. All right, and then here 1, 2, 3 closures above. So 1 closure, a third of that, and then 1, 2, 3, 4, 5, 6, 7 interactions. Divided by 3, let's call that 2. All right, so now we have 7 closures and 14 kisses. 7 and 14. So let's go like this. Watch. Closures, kisses. We have 4 and 8. We have 7 and 14. All right, now we're going to do it for current price. How many times did it kiss the line? Once. This was slightly too far away, and it closed red, which means it closed running away. So I think it's only once. How many closures above before it got hot? 0. Okay. Okay, I see what you're doing. Right? 14. All right. So now, okay. What you gonna do, Tim? What are you gonna do? All right, here we go. You ready? 0 and 1. Okay? Something does not look like the others. How am I interpreting this? So I don't know if this is a deterministic factor. I personally think it has a strong likelihood of being it, but you don't have to share that opinion. However, what I can say is I'm somebody who's maintained bull market or bear market, but particularly when price is having a trend change, that is when it's hyper important to focus on price's relationship, both on the 1 minute chart, how it interacts with the red line or the weekly 10 when it does. Did it just fly past it, never even use it as support? Is there any support built on it on a 1 hour time frame, right? So I'll look into it like that, but also on a weekly closure basis. Because let's say it spent a day and a half writing that weekly 10, right? But all on that big green candle there. That's still not enough, because the relationship of price to this red line specific to the weekly closures is a little more important than opening up the guts of this candle and ripping out, opening up the candle and zooming in and ripping out the guts on the inside and looking in. Looking out, the bigger stuff is more important. The time frame interaction. However, in terms of trading the moment, then I would use that, right? Like on the 5 minute chart, which way is it going? I would look at how the small candles are interacting with it. But on this sense, is this rally going to result in lower lows? I think this is a strong piece of evidence. And that the answer is yes. This is essentially an Achilles heel. It's a blind spot, a weak point in a run. And the theory that this is up now and this low won't be taken out. This is not how bull markets start. And it's not how a bull market's going to start. Now, can the bottom still be in? Yeah, absolutely. This sucker can go sideways for a year and a half or 2. Hell, it can go sideways for 10, right? But, gold just did. This is called digital gold. So why can't you get a digital 10-year sideways? If you're digital gold, and gold, that's what gold's been doing, 10 years of sideways. So you can get a digital 10-year sideways market too, but to be slightly more reasonable and not make such conjectures so far out. But within the next couple years, the low could be in. And so it's possible that something new happens, right? Or something more similar to 2015 happens. It's kind of also this is what this is kind of saying. Like maybe the bottom is in, but your ass is going sideways for a year. I think that is best case. However, within that best case, that isn't that sexy or bullish. The bottom could easily be in. But if I think the bottom's in, I would not think that we're getting a bull market yet. Guys, this is not a bull market start. It's not. It's not a bull market start. The best that this can mean is it's going to go sideways for about a year or a year and a half and potentially make a higher macro low, maybe as high as 18K at this point, honestly. That's honestly pretty reasonable because that would be hitting the next origin line down, which it has to do before it touches the next one up. You got rejected by this and used that as resistance. You have to touch this one. But hey, That's already like getting to 20K. Look at this sucker. Right? So the theory that that the bottom's in honestly isn't that unhealthy of one. But it's going to be unhealthy. Look at that, 18, see, look at that. But what can be unhealthy about it is if you're too bullish with that. You need to know what the bottom in means. It means that this is probably gonna slam them down. And you are gonna be crossing your fingers for a higher low. Even if that's 16,600, only $1,000 higher in this one. A horseshoe bottom. It's very common, horseshoe bottoms, right? It happens on the weekly as well. Horseshoe bottoms where it's almost like a perfect U shape, right? Like a double bottom essentially, but sometimes a little off. So that's how that mindset and that opinion, which is a fair, fine opinion, but you're setting yourself up for potential trouble because that opinion as a tool is sharper. So I might have a log splitter, which is one of those big, heavier, clunkier axes, right? It's not an axe, but it's a log splitter. So I'm using log splitters, right? And you might have an axe. Is maybe the difference here, right? If you hold that opinion, that's a fine tool. You can chop wood, get work done, so can I. I'm just doing something a little bit different with the wood right now. But with you have an axe if you think the bottom's in, and you can get a little bit more, you can cut yourself a little bit more easily. So be careful with that tool. It's a fine tool. I'm not saying it's not okay. I'm saying you can hurt yourself with it more. You can totally screw your account. But if you're too bearish, well, what are you doing? You're just sitting on tether waiting. You're gonna get a higher low sometime. So if you're too fearful of the market slamming down, you're gonna be fine, even if you're too fearful. Can you miss a run to 38K? Sure, but it's still gonna come back down to retest 20. You bet your ass it will. Okay, that's worst case. They're gonna be fine. So if you're overly bearish and you're just way too bearish, you're still gonna be fine. But if you're bullish and not in the right way, you can totally screw up your account. And that's why I made this public video. I closed my community because there are too few people in crypto. I ran some analyses. It's pretty much all bots on Twitter crypto Twitter and NFT Twitter. And it's almost all bots on YouTube. So I just said, screw it. I'm not playing that game. I don't want to measure success by the increase of subscribers by bots. Screw that. I'm not doing that. I'm going to mess up my analysis of myself and my strategy, right? So I closed the community partly because of that. But also I got a lot of requests that the information I was giving out was too good to be free. So I was like, screw it. I'll just close the community in the bear market, maybe open it back up later. So, but I needed to make this video because I mean, my true north is I'm trying to help people out. If you have an axe, that's fine. Just be careful with it and know how to use it, okay? And what that means in this context is it's going to slam back down and probably go sideways for over a year. This is not the start of a bull market. We're not going parabolic from here. It's simply not going to happen. Achilles heel, blind spot, it's way too weak. It has to come back down. All right? But it could go up a lot more. It could hit 40K first. But the higher it goes with this Achilles heel, the more, the bigger of a splash it's going to make on its way down. All right. So the bigger you are, the harder you fall is essentially the same thing. You just got typified worldwide. Take it easy over the weekend. Don't try to get aggressive with shorts because the momentum's still up. We'll see you next time.